All right. Welcome everyone to the umpteenth installment of the Enduring Planet and Friends Community Event Series. We host these events once a month. We may take a break in the summer, TBD. We'll keep you guys posted if you're signed up for the calendar. Um, we do these events because we've kind of identified this gap in the content ecosystem around tactical and actionable content for entrepreneurs in the space, especially around finance topics. So we generally bring on some of the leading experts to share their opinions and their perspectives and be very candid about the realities of the market. And that is definitely what we're going to do today. The way these work, we have a pretty chock full agenda of questions, but we really love it when the audience participates actively. And so we would love it if you could just drop your comments and questions into the chat below or to the side or wherever it is for you. We will either integrate those into the flow or respond to them in real time. So the speakers, I would ask you guys to just monitor the chat and make sure you're paying attention to what's being flagged there. And what else should I add? Hannah, anything I'm missing here?
Not at all. Just a big thanks to our sponsors, the Wilson Sonsini team, and to these amazing speakers today. Daniel, Marie, is it pronounced Kathleen? Amazing. We're so thrilled to have you here. Let's get into it. By ways of quick introduction, hello. Many of you don't know this, but a year and a half ago, I self-invited myself to Dimitri's content planning meetings after we'd known each other for a year, and that was the genesis of this webinar series. So I work at in the embedded kind of CFO function for heavy industrial platforms and climate technologies from an umbrella called Lupine Finance. In my past life, I have been a venture investor and have had the privilege to work with some of the folks around the table here, including Marie. And with that, Dimitri, you should introduce yourself in Enduring Planet in 2 words, and then we'll go Daniel, Kathleen, and Marie by intro.
Perfect. Yeah. So I'm Dimitri. You guys will hear a lot from me today. I'm the co-founder and CEO of Enduring Planet. We provide two primary services to climate companies in the US today. We are a lender and support the working capital needs of climate entrepreneurs. And we also provide fractional financial services, or sort of finance back office support to climate companies. So we are, accountants, modelers, um, board reportees, whatever you need us to be. And we work with about 80 clients today in the climate ecosystem. So with that, Hannah, I think you said to Daniel first, right? So Daniel, take it away.
Cool. It's a pleasure to see everybody. Um, Daniel Beer. I run a small group that supports both founders and GPs on fundraising, a lot in the climate space, so we can talk about that. And the group is basically based on the assumption that fundraising is an idiosyncratic exercise that's quite different than actually running a business or running a fund. And you only have to do it a few times, and it's better to work with folks who have done it, 60, 70, 80 times and are able to figure that out for you or with you. We work with, 80, 90 venture funds, often funds 1 through 3, and 100 or 110. The numbers keep going up. CEOs, seed through Series A often, but also many late stage deals. And I have a background as an investment advisor, a lot of impact oriented stuff, not just venture, but real assets, industrials, all sorts of things which are relevant to the climate space. So happy to be here.
So excited to have you. Catherine, please.
Hi, everyone. My name is Kathleen Mead. I am with the Bequest Foundation, and we are a private family foundation that invests predominantly in projects and activities that will mitigate the impacts of climate change. We also are interested in affordable housing and make some investments in that space. And we give extra points where you can mix those together and have an impact on affordable housing, a climate impact on affordable housing. By way of background, I have been in the impact investing space for about 20 years, predominantly with large with large philanthropy, and I'm happy to join you today.
Awesome. Thank you. Marie?
Hi, everyone. It is a pleasure to be here. So thanks, Dimitri and Hannah, for convening such a great group. My name's Marie Thompson. I'm a partner at Powerhouse Ventures. We're an early stage VC fund focusing specifically on pre-seed and seed stage climate companies building digital software or AI companies. So I've been with the firm since 2019 and come by way of traditional energy, actually. But my entire career has been at the intersection of climate and energy and risk. And given our investment thesis, we're seeing a lot in this AI moment. And so excited to have the conversation. Thanks again.
Yeah, and just maybe before we get started, I'll share a little bit about the flow today. So we'll start by talking a little bit about sort of the financial narratives that people project when they talk to investors. Then we'll talk a little bit about communicating impact across different audiences. We'll work through sort of how to navigate the current frothy AI market environment as a non-AI company or even as an AI company. Um, and we'll end with some kind of quick fire lessons from this really incredible group. So maybe a quick question for everyone here, just to get started. Every VC has a different, well, VC, lender, project investor, every allocator has a different definition of a compelling financial narrative. Everybody says it, nobody actually knows what it means. And so just curious, maybe we'll go around the room. Let's start with Marie, then go to Daniel, and then Kathleen, and then Hannah. Like, if you had to define a compelling financial narrative in the context of fundraising, what does that mean, and what separates like a good financial story from one that isn't?
Happy to go first. I think also just caveating that we see early stage digital solutions. So I have like one lens that might not be fully applicable. Um, I think if it's okay, I might like zoom out slightly and like a few
Sure.
key points to start. Of like the first is that especially venture capitalists are a little bit like shiny object 8-year-olds. Like even at a specialized fund like mine, like we're never ever going to know as much as founders know about your sector, about the why now, about the business that you're building. Like it's always a really unique combination, and I'm always playing catch up. And so I think leads into point number two. It's like the best founders in all forms of communication, I think, can really scale this ladder of like, talk to me at the 50,000 foot. And when I'm ready, like, keep bringing me down, knowing that you can talk to customers at the 1 inch yard line and like all the way back up and down the ladder. And I think it's like a core skill and attribute of running a business really well. And you know, when we're assessing companies in general, last point generally, so much is about team and articulation and looking for like the strategy driven story versus like the story for story's sake of what are you doing in your business that you can kind of communicate back to me. And when it comes to the financial vision, I think the communication of where you are financially is one of the biggest things. And so we see it in a few ways, like conversations, but often like the data room. I think what you're presenting as a financial model as a pre-seed company, for example, is probably totally made up and wrong. You're a pre-seed company. There's a lot that's going to change. You're not sure of your assumptions. All of that is fine, great, understood. But I think the way it shows how you're thinking about assumptions, how you're thinking about risk to the business, how you're thinking about scaling up and down, like how you are organizing your thoughts strategically and financially, and then communicating them back to investors. Like those are all, I think, really important and cohesive things. So I think if I were to answer this question to not talk too much and at the highest level, like we're hoping to see like the financial narrative actually imbued with why you're a unique team and what's really interesting and differentiated about your strategy, alongside with what you can show us about how you're thinking about risk, how you're thinking about the market and the market timing, how you're thinking about cost and revenue, and just like a lot of the basics that it takes to survive and then thrive as your business hopefully succeeds. So I'll maybe pause there in a hopes that I answered
Awesome.
your question.
Thanks, Marie. I mean, there's a lot of these things that we're going to come back to throughout this session today. So I love how you kind of teed up probably half of the content we'll do today. Daniel, just
Yeah,
quick thoughts on this before I'm going to actually come back to you with a deeper question in a moment.
sure. I mean, I think Marie's point about the founder being the expert is actually a really powerful one. And I think it's something that most entrepreneurs do not embody in the power dynamic of a fundraise. So when you're walking into a room and it's your company in your sector, you have the opportunity to educate the investor as to how your industry works. Now, that's not to say they won't have biases about what's going on with you, which they absolutely will. It's really important to understand what those are. But this is actually your domain of expertise, and it's important that you own that narrative and take that power back in the context of asking for money from somebody else. And so I think it's a really, really important point. The second point that I'd make is, like Marie said, this is early stage stuff. So your financial projections are projections. What people are really doing is they're sort of pattern matching for internal consistency. They're saying, does the strategy that the company is putting forward match the way the financial model has been laid out? And is there a logic there? And, is this an enterprise sales model with a certain type of growth, or is it sort of product-led marketing with a different sort of thing? And making sure that you really get tight on the strategy and obviously why you're going to win and what sort of really kind of key unlocks you have to get to scale is tied into that narrative is actually much more important than making sure the financial narrative is perfect and explaining all the complexities inherent in that.
Yeah.
So that's what I would say are sort of the two pieces. And then obviously there are just the macro dynamics around venture capital, which are like a certain amount of scale matters
Yep.
in order to return that fund and understanding those incentives is important to kind of get past the waterline.
Awesome. Kathleen?
Early in my impact investing career, someone shared with me something that I remember every time I hear a pitch, and that is no stories without numbers, no numbers without stories. And when I look for a compelling, or I listen to what's really a compelling um, a financial model, I begin to think about where's this going and where are the numbers, what's the impact that it's going to have. I often think that what happens is we get caught in the numbers because you're trying to make the pitch for somebody investing in you and your company. But what we as impact investors are really interested in is what is the difference your product is going to make, not only in the community in which you are going to be working, but what impact is it going to make if we invest in you in your company in the
Mm.
short term and the long term? How is this investment going to help you reach your milestones for growth and for you to be able to make those determinations? And as Marie point she made earlier, which is where you're going to be your pivot points. How are you going to know based on those investments what kinds of changes you're going to make? I also want to tag in on something that Daniel said, which was it is very important for you as the expert, the owner of your company, to be able to share that expertise and to present yourself. We oftentimes make our investments on, do we think that that leader can actually take this product into the end zone? Can they move it into the red zone and that into the end zone? But what's really important is for you to also touch on who the team that you've surrounded yourself with. Who's advising you and who is supporting you? And how long have you been together? And are you really building this company with a team of people who's going to support you as opposed to standing out in front and making those decisions all independently?
Hannah, anything you want to add?
I'll make mine super quick because I can really underline and underscore all the smart things that have just been said. Um, I would say that I love the framing about using numbers tied to story and that consistency. When you can get multiple team members to share that consistency and refer to the same numbers, it evokes this confidence that internally the organization is as well managed and is as aligned as what is being presented to the investors. The worst is when that differs. And one archetype that often serves any pitch very well is what are the historical data points, what's changing or what's inflecting, and how does that project forward? So if you're getting a question on, unit economics. Like we've historically had 40% churn, and we believe that number is coming down because we've just initiated B2B partnership, as a novel go-to-market strategy. And as a result, we expect revenue to exceed. Like, do you see how that goes from like, I understand my historical data. I'm showing you what's shifting in and around this fundraise, and it looks forward to understand that growth trajectory. You can do that in pretty much almost any setting. When we were raising capital for Planeteer Capital, which was an early stage fund, I had the immense privilege to help launch from scratch. We did very similar things when it comes to the financial inflows to the climate sector, how that is shifting amidst a sophisticating capital stack and what that means for growth. So even if you're a GP or investor in this room, talking to allocators, which Kathleen and Daniel know well, and Marie herself has raised funds, that same storytelling traverses across it. And I think that what is often missed in financial narratives is the underlying incentives. If you are a founder raising from VCs, we talk about this all the time on this series. Having the empathy for what your VCs have had to do to raise that money from their allocators helps you earn a level of confidence and show alignment in achieving their financial goals alongside what you do with the company.
I think this point about like how you say things versus what you say is going to be a really common thread throughout this entire session. I think oftentimes people over index on like what are the numbers in this cell or what are the things on this slide, and everybody's kind of saying the same thing, which is like how you tell that story, how you connect it to other pieces of your business, how your team is aligned around the story, how these things all fit together is actually often more important. And I'm curious, Daniel, like coming back to you, so you've raised sounds like over 3 billion for companies across your business, which is a crazy number. Um, is
They've
there
raised it. We've helped.
yeah, sure. You've helped, and that's fair. That's fair. But are there any commonalities in terms of when founders face really like rigorous and sophisticated financial investors? Are there sort of like common kind of things that seem to really work for those folks? Is there anything that sort of unifies the people that are truly successful when they're engaging with? Because maybe just for context, like
Yeah.
most of the investors you're going to talk to, especially at early stages, are not particularly sophisticated when it comes to finance. But as companies mature, that starts to change. And so the
Yeah.
question is like, what do you see work?
Um, this is a maybe non-obvious answer, but process. So what I mean by process is if as a company gets more sophisticated and there's more things to understand about that company, like Marie was mentioning, something you start at the high level and you start to go deeper and deeper and deeper, and over time you're able to build that conviction. The mistake that a lot of folks make is they're trying to get 100% yes on the first day. And so they mix a lot of the things that they need the investor across the table to understand on day one versus day 30.
Mm.
And so understanding from your perspective as an entrepreneur, what is the thing that I need the venture capitalist or the growth investor or frankly the project financier to understand in this first 30-minute meeting is actually really, really important versus what they need to understand in a second meeting, a third meeting, a fourth meeting, in which you're able to tell a broader narrative using additional materials, references, right, and other people and other team members, lead investors. You're able to sort of create a narrative as a whole using various types of supporting evidence. So I find that a lot of folks really don't understand how to stage their fundraise conversations because they're sitting there saying that person's got money and I need it. And so they're going like, I got to get it right now. And when you show the discipline of being able to say, this is going to be a process that unfolds over the next 6 weeks, and here's how I see that going. Does that align with your process, sophisticated investor? Then you start to actually be able to build the space to build confidence, and it gives you a lot more tools to succeed at that table. Is that useful, Dimitri? Does that answer your question?
Yeah. Yeah. I mean, I think the applying this, obviously that applies to all of the fundraising narrative, not just the
Yeah.
financial side. But what's interesting to me is I think oftentimes what we see founders do is they try to dump like a lot of financial information uh, onto an investor all at once in the beginning. And to your point, like actually, even with the financial narrative, you still need a hook. And you need something that gets them interested to want to dig in. And if you overwhelm them with too much stuff all at once in the first meeting, like, no, they don't need to see your P&L from 20 years from now on day one.
Totally.
They don't
And
care.
I think you can always signal that there's more depth to come. And I have that stuff dialed. And there's a few folks that I want you to talk to. But the thing that I want you to understand and connect on today is like that sort of discussion. It also shows you're patient, you're doing your diligence on them, they're doing so it allows a process to unfold because trust is not built in a single meeting, particularly with sophisticated investors who are really looking into what's happening underneath in the business. So yeah, that would be I mean, there's some other stuff. I think they're always underwriting judgment under uncertainty
Yeah.
for a CEO. And so you have to embrace that there's uncertainty
Mhm.
and display judgment. And I know that's a little bit of an abstract point, but I think it's really important for those to succeed in that process. But the biggest piece that I see people miss a lot is just staging and process.
Marie, I want to come back to you and lead into this like consistency of narrative kind of idea that we've been talking about. So, as an investor, like what are some of the common tells that you look for when when you see a deck or a financial model where it's clear that that consistency isn't there? Like, how do you go through that process? How do you investigate something for consistency, and what are the common signals that you see for founders who are not consistent?
Yeah, I'll answer this in the context of AI as well because I think Claude can be a super helpful tool to do small things and edits and stuff that your CEO brain is genuinely too busy to do. Claude is not great at generating ideas and putting them together cohesively. And Claude also has a really distinct voice. So we are familiar, if not fluent, I think, right now in decks generated by Claude. And so just know that, like, off the bat, it doesn't necessarily detract from what you're saying, but it makes you stand out way less, especially as it relates to your point on this like unified story and being holistic. And the key attribute is like, wow, this looks so great and looks so smart. And then the second you start reading closer, it's like buzzword bingo. It's vague. It's like unspecific. And this concept jumping is really prevalent. Um, I kind of mentioned the ladder of communication, and I think that is kind of key. So I'm trying to find the right place in my notes where I thought about this, and I am failing to find it, which is really unfortunate. But I think like walking down that ladder and walking it down it in a way that self-reinforces has always been kind of the model. And then maybe building on Daniel's point, know our incentives, right? Like I think that's another really key point to make is the very kind of overused line of we're a jet fuel provider and you are building a jet. And if you are not in that very kind of narrow window, venture capital might not be right for you. And so when I'm doing my early diligence checklist, which is not super special to Powerhouse Ventures, I think a lot of investors think this way. What am I looking at? I'm looking at the team. I'm looking at the market size and I'm looking at an initial cut of a pro forma that shows me you can think strategically about how you stitch it together. And to Daniel's point, I think a lot more will come from there, but it's show me kind of that the basics are there and that this is a good fit. Show me that you're a unique team with a creative angle. And again, I can talk a lot more about this, but in the era of AI and everyone can build anything in 2 weeks, that is becoming like a higher and higher bar that you're a unique team with a creative angle that can build, if not today, then in the near future, a differentiated and durable business. And having those things self-reinforce throughout the story, I think to Daniel's point, again, the jumping between concepts and details, the trying to show maybe a little bit too much, or the assumption that I, as an investor, am as deeply ingrained and fluent in the space that you're in. I think staying higher level is always the right call, not getting into jargon too quickly. And like everything you're saying boils back down to this is a unique angle on a sound business strategy that can go to the moon. And I think just like continuing to pull those threads through, regardless of the slide or the specific thing you're talking about, those are decks that stand out versus being a little bit repetitive or more generic, which again, I think in the rise of Claude is becoming more and more prevalent, at least from our side.
Yeah, I think that's really helpful. Hannah, I think curious to hear your perspective as someone who's now worked with lots of founders who have raised a ton of money. The sense that I often get from entrepreneurs is that they have their financials that they work on, and then they have the like narrative that they tell. And those financials are like plugged into the narrative, but they're kind of managed as two separate work streams, right? And so I think the thing that we're hearing from this panel is like you probably shouldn't do that. You probably shouldn't do that early. But what is that what does it look like when it's done really well? Like, what does that process look like for the founders who are able to marry this work in real time so that it is actually as cohesive as it needs to be for a sophisticated investor?
Yeah. I think if you are building a financial model with the explicit purpose of putting it in front of investors for them to underwrite, uh, you are already behind the ball. Like the financial model should also be originally helping you start making operational and strategic decisions about the business. And I think that when it comes like, and that can be even back of the envelope stuff on unit economics, right? But like I want to understand, like I've literally seen founders who have built me bottoms up financial models where they say, look, I run a reuse business and it takes me 5 minutes to run a dishwasher for every reusable container. I can fit 50 containers per, like they do the math at this like hyper granular operational level, accounting for the time it takes to change out the dishwasher. Like there's something very compelling about having thought that rigorously about the fundamentals of the business. And that can be true of like a more complex, electrocatalytic process in a TEA, for example. But those fundamental input data of the financial model should have come way earlier than whatever it is you're polishing to put in front of an investor. When you are publishing to put it in front of an investor, I think you have to ask yourself, like, who's owning that version of the story and tying it to the deck. For example, sometimes a kick-ass chief of staff can be the commercially minded individual and the storyteller who does that preparation in partnership with the CEO to like get the CEO's brain on what feels natural for the narrative, but then buffer, like bolster it with all of those data points throughout. If you come to me with a deck that has a high level, it should be 10 pages at the beginning, and it has your capital strategy over time of like the orders of magnitude you need to raise in order to reach scale and profitability. And then I get into diligence and I find out that those numbers never represented anything of reality. Those mismatches result from different people owning the deck versus the underlying financial model that bolstered the deck. And sometimes CEOs can do this, like they are the people who sit across all of it, especially at the early stages. And if you're in the later stages, it's a partnership or some type of working group that does that. Lupine ends up being the one of the management teams that does that for companies. But we spend so much more of our time on strategy than we do in the actual Excel because that's where it's important. I hope that's a helpful picture. I think my last like tactical note to the founders in this room uh, is if I'm an investor underwriting your and looking in your data room and I notice inconsistencies, it just raises my like the hackles on my back and it brings all these questions where I'm like, ugh, am I really gonna pitch this at investment committee and really stand behind this when I feel like I have to ask you this laundry list of confirmation questions? But the truth is, I'm going to write all those down and I'm never going to tell you about them. Like, I'm never going to ask you to confirm, like, hey, is this 80% yield or was it 8% yield the way it was stated in this other document? Like, that never is going to come through to you. So, if in your financial process or your prep process, you don't have someone looking with outsiders' eyes for those inconsistencies, you're missing an opportunity uh, to have like not lost trust with your investor in the process. And unfortunately, your investor is like not going to be willing to call that out to you.
Yeah, I think there's 2 points that I want to kind of pull out of this. One is that um, almost all investors will have the same reaction to inconsistency, which is that unless they have like no pipeline and they have to get a deal done and have to put money out the door, they're not going to bother with figuring out if the yellow flags are actually red or green. As soon as you start raising them, you're not like it's not likely to work out for you. And so you want to minimize the unnecessary yellow flags. And you also want to be transparent about the real ones, right? And so I think this kind of inconsistency is like a yellow flag that is very easy to minimize. and causes way more pain for people than, you know. Um, and then I think the other piece that I want to flag is like, I hear this a lot from pre-seed VCs and even seed stage VCs where they're like, oh, your financial models, like it's whatever. We don't really care. I think the reason that they say that is because the numbers are likely not real, which is fine. But what they're not telling you is that the narrative that that model can tell about how sophisticated and rigorous you are as a founder is is substantial. And so people will be like, "Oh, don't worry about the financial model." But actually, if you show up with a really thoughtful one, you all of a sudden get like made bonus points, right? Okay, I'm like watching the time. Let's switch gears a little bit and talk about impact storytelling because I think right now it's particularly important, and for a few reasons. One is that I would argue that there's maybe less impact focused money now, which means there's more competition for impact focused money, which means telling a better story matters. I think also because a lot of the founders in the room have to navigate dialogue with very different investors, some that are impact first, some that are call it capitalism first, others that are in the middle. And being able to shift narrative and focus on the right things at the right time is actually a skill that most people just don't have. And so fundraising in the current environment is already hard. A lot of these dynamics make it a lot harder. And so I guess maybe let's do like a quick round robin, and I'd love to start with Kathleen and then maybe go to Hannah, then Daniel, then Marie. So in the current market, like depending on who you talk to, impact is a good thing or a bad thing, which is insane, right? So how do you see founders talk about impact in a way that is like authentic and effective without triggering the, oh, you're like squishy, not a capitalist enough for me to make money, so I don't want to talk to you. Like what do you see really work for people? Kathleen, can
Sure,
you go first? Yeah.
sure. Thank you. I'll begin by saying that it's really important to know that many impact investors will say they're impact first, but it's really for them important for them to have those financial returns as well. And because many impact investors are going to investment committees that are saying, yes, this is a great impact story, but are they really going to deliver? So you have to be able to marry those two stories, the impact and the financial story as well, the financial outcomes. What I think is really important for you to be able to tell your story is, where does this passion come from? Is this that you see an opportunity in the market and you're saying, you know what, we really like to begin this company and we're going to meet these deadlines and these timelines and meet these financial goals and these social goals, and that you don't have a story about why you're interested in doing this. Was this something that you are passionate about? Because founders who are passionate about their product or their service are oftentimes going to stick with that product or that service while they are faced with all kinds of challenges, market challenges and investor challenges, because you believe in this. And I think that's really an important aspect that gets oftentimes forgotten in the pitch is, why are you here? What makes you passionate about this product? And I think it's an important story to tell. I also think that while it is important right now to be able to tell the story of impact, because we are living in a time that is kind of squishy around impact. It doesn't want to feel too soft. You want to be able to say that you've done all of your own diligence to be able to test and to gather information so that your milestones are real. What you want to be able to do is to base that on what? Where have you seen products developed, and how quickly did they come to market? And how does your pricing compare to what you think you're going to be able to price your product in the market? And that has to be dependent on your being able to show that you're not just making up these numbers and hoping them to be real, but that you've actually done your own due diligence and can say, I back these up based on this information that I know is real in the market.
Hannah?
Yeah, I really appreciate a lot of those comments there. I think the passion point is echoes Daniel's point earlier about like you are an expert and own that narrative, and your passion will come through in doing that. Um, I think in a lot of ways, I'll take a contrarian view just for the sake of being spicy here. I think that like in a lot of ways, um, having worked in impact and climate technology, studied sustainability, and having been through these capital markets ecosystems, through zero interest rate environments, big balloons, big crashes, I think it's healthy for impact to be challenged. I think that there are going to be some grapes on the vine that die of like, should we have ever brought carbon on chain? Not totally sure, for example. And maybe that was like a crypto 2021 bubble, right? Um, I think that one of the best storytelling that I have come across for impact is know your customer. Communicate through the empathy and the lens of your customer as an early stage company. And we did this at Planeteer as well, when our customers are the companies we wanted to fund. Imagine a GP saying, listen, the reason you're going to fund a climate fund in a 2023 vintage is because, sure, there was a huge bubble and an inflow, but like climate founders are still missing a pre-seed and seed institutional investor lead who can take hardware risk, who can understand the specific nuances of climate and be an institutional investor that can lead. So we really communicated our impact, not necessarily just from a do this because it's good for climate, but because this is a hole in the market. And regardless of whether or not you believe climate, like we should be decarbonizing and creating healthier food systems and everything that goes into sustainability for equity and justice for all, it's going to be a huge transition. Like the order of magnitude is so big, and the fundamentals of venture investing in that time could be so impactful. Why would you miss out on that wave? Was part of the storytelling we used. I think the same can be true in today's market of like even if you are selling carbon credits or something that has become a little bit more um, polarizing, even if it shouldn't be, communicating from the lens of your investor of like, listen, my customers are multinational companies who span European and other geographies, and they don't have the luxury of catering to the swings of the political environments in the US. Like they have to stick to these mandates, like the CEO's lines are on the job. That is often the more compelling approach of like, why is there still an economic case underpinning your impact?
I I actually want to maybe I'll interrupt the round robin and Marie, I want to ask you a very specific question. So we've talked a little bit here about this interplay of sort of the impact narrative and the I'll call it the commercial narrative, the like the outcome, the financial outcome narrative, right? And when when you look at companies who come to you and pitch Powerhouse, like what do the times look like when the impact narrative actually detracts from the commercial story versus like amplifies or improves it? Because I think obviously the goal is the latter.
Yeah. Again, I feel like a round of beers and a longer conversation at some point, but like anything coded impact right now is like not cool, just in the way that anything coded deep tech is like more interesting. Like we're an environment driven by some really real things with the administration, but also like nonsense VC FOMO things. But I think like perception is reality in general. Like we are not an impact fund. We see massive economic opportunity investing in the space, like full stop. And so I think there are a lot of climate funds that are along those lines. But to your specific question of like where it detracts versus where it amplifies, it is a really fine line right now because I think what is compelling or differentiated in this market is teams and your ability to attract and retain A plus talent. And if you are, to kind of Catherine's point, like if you are have a deep seated why of getting out of bed every morning when this market and this job is whacking in the face every single day and it keeps you going through hard things. And we've seen this again and again and again over years, especially with the tech layoffs over the last 18 months. You can attract super A plus talent who care about climate because of their kids or whatever. Like all of those things, I think are really important. So self-sustaining as well as a recruiting advantage, I think are demonstrably real, at least in our portfolio. However, like I think anything that you can do to tie this like passion or impact orientation directly to business things that allow you to grow really fast. So like keeping you going as a CEO, retaining A plus talent, to Hannah's point, deeply empathizing with customers in ways that allow you to kind of skip a hurdle or two and move farther. I think it's you've got to tie it like it's impact minded in the service of pushing really hard, serving customers really aggressively, growing really quickly, and staying out in front. Like that is like the deeply driven operator mindset where I think it is a very powerful addition. I think the detraction is when we're doing team diligence, we in the later stages of our process, we call it a character call. It's almost like a deep dive interview, which is like, who are you and how do you operate? And let's pull out some themes around grit and stress management and how you're going to be a manager and a leader. It becomes a little tricky where people are like, I just care so much. And you're trying to balance their care and passion, which can be seen as being soft, not being as aggressive when it comes to growth in customers, not being as aggressive when it comes to financial outcomes that make me successful, and those things that do like add to your business because you are a deeply motivated person. And so it is a tightrope line. So I think the tactical advice is when you are speaking about your passion, which is important, and like nobody running a climate fund doesn't care about this stuff. But we're in a hyper competitive environment where a lot of this is coded on the back burner. How does it like really, really directly fuel your success and like keep it there? And hopefully you're living and breathing that versus just telling a narrative. But I do think there are very powerful ways to do it well.
Uh, I'm gonna ask a question that we didn't actually write before. So Daniel, I'm gonna give you maybe a little bit of a surprise, but I think you'll be able to answer it. So I think one of the kind of concepts that's emerging in this dialogue right now is this idea of like the trade-offs between impact and commercial outcomes, right? Like, oh, you might be so committed to this impact that like you won't be, the like capitalist you need to be in the moment to get the best outcome for your VCs, right? And so I guess I'm curious, like for folks you've helped to, you've supported to raise, um, how do they defend their like commitment to impact well in the context of, you know, questions around like choosing a different path. Yeah, I'll give you an example, right? So like people would, when we started fundraising for Enduring Planet, people were like, oh, well, your model of doing this kind of lending is compelling in lots of markets. Like, why only do it in climate? And we had an answer that I thought was compelling. It had to do around with the sort of access to a certain kind of capital and cost of capital that otherwise doesn't exist, an ability to like build a compelling brand that then allows us to have lower cost of customer acquisition because we're specialized and people know who we are. Like lots of answers, but I'm curious what you've seen people do well in that
Yeah.
context.
Yeah, so I think the first thing is you want to tie it to like a core business metric if you can, right? So what I mean by that is in a past life, I did affordable housing and real estate investing. And at the time, the sort of everybody wanted sort of impact real estate community development. And what you saw was the standards around community engagement rising, right? Like the Amazon thing in New York. And so when somebody tried to move into a place, the standard around did they engage with the community was higher, and it actually created friction for market entry. So a naked real estate fund would have a lot more friction in one of their core metrics, which is frankly acquisitions, if they didn't do impact, if they didn't actually engage with the community in a thoughtful and real way. So anytime, and this is not true with all companies, right? So, but this is like the best version of it when you can find a really core commercial metric that matters regardless of whether you're impact or not, and tie it to a strategy that actually happens to be good for the world, then the logic there is really, really tight and really clear. So that would be my first thing. Look for that. The second thing is I think the word impact um, is often actually not that useful. Uh, Everybody has a vision for the world that they want to see in what you might call today like the impact people versus like the people who don't care about you. Like they also have a vision for the world that they want to see, and they are making non-financial oriented bets on that vision as well. And so when you think about engaging with one, with investors, you want to understand what they actually want to see for the world outside of this sort of narrow vision of ESG or impact. And if you can align what you're building with that vision, you actually have a large chance in them backing you. So I think it's often because it's like over here, we are the people that care, you know, those we actually narrow ourselves outside of the lens of a bunch of other people who are very, very well capitalized and also believe in some sort of an outcome, societal outcome for the future. I had a conversation yesterday with a large investment manager who has like 30 or 40 endowments, and they're all mission aligned, and he has to put forward a thesis around AI investing for as part of his fiduciary duty is what does it mean to do ethical investing into AI? A lot of his clients are sitting there saying, I don't want to do any of it, you know? And he's like, but that's not going to make sense. It's going to affect everything. What does it mean to create that lens? So understanding what people mean when they say they want some sort of vision for the future is really critical outside of what you might think are your personal moral codes, and aligning with that, I think, is really, really critical. And there's plenty of capital out there that cares about some sort of future, notwithstanding what you might call impact. There's a lot of anthropic money right now moving into philanthropy. I know a few people who are receiving a lot of that money, and they're not in the same clubs that, in a sense, us climate people have been in. And I think it's actually really important that we cross some of those boundaries and get some of our values conveyed into those worlds that are spending a lot of capital too. So I would say break out of this word impact. There's a lot of money out there, and it has nothing to do with financial. Is that useful, Dimitri?
Yeah, yeah, absolutely. And I wanna like go from that to Kathleen for a second.
Yeah.
So, Kathleen, you represent a sort of a unique perspective in this room, which is that you guys are like, maybe correct me if I'm wrong, but you're sort of unapologetically impact first, right? Like impact for you, impact is the primary outcome. Commercial is in some ways secondary. And so I guess I'm curious, like for the folks that are effective with you, right? For the folks that come to BQuest and give you something that you really want to fund, how did they convey that? Like, how do they align with your impact first needs, even though they're, a commercial entity, right? Like, are they doing something different? Is there something unique about how they message that?
Yeah, so you are correct. We are unapologetically impact first. That doesn't mean that we are not going to look at the financials and that we're not going to ensure that there are clear communications with us about how those financial goals are going to be met. That's really important. But I think the important part of how people are communicating that with us, and we know that impact is important to them, is that number one, they have the right speaker and the right presenter on the team. Sometimes the owner of the company is not the best person to tell the story. It's great for you to be in the conversation and for you to be able to tell the story. But if you find yourself not as well organized in your thought process, if you find yourself too passionate about the project and that you're not able to build the bridge between the impact and the financial outcomes, it really is important to get somebody on your team to join that conversation early and to be able to tell that story in a very succinct way so you get invited for a second conversation. As Daniel pointed out early, that first half hour is really important. We may have spent time looking at your data room. We may have spent time getting to know everything that we know about what your company may be doing in the market. But unless that first half hour is really well organized and you're able to tell your story in a way that that compels us to invite you for a second conversation, I would say that you're making a big mistake. Have your best speaker present the information in a very logical and a very well thought out manner. I will say that impact is I like what Daniel said about, let's not focus too much on the impact story. I think a little bit about sort of the AI component of this and how a lot of due diligence is now being done through AI. And, keywords are important, obviously, but if you always tell your story based on here are the financial returns, here are the environmental returns, and here are the social returns, and your story just keeps hitting on those keywords, it feels a little too inauthentic. And what you want to be able to do is to tell that story in an organized way, but not so organized that you're missing the authentic story that you want to be telling to us as impact. And I want to just touch on something Dimitri said earlier, which is oftentimes the pitches that we get are everything is sunshine and lollipops and rainbows, and it's going to be great. We actually like a little bit of vulnerability. We like to hear you talk about where you anticipate there are going to be potholes, and how you know that they're coming and how you're going to work around them. And I think that just really helps us again recognize that you know the what you're going to have to do to be successful, what you're going to have to do to win. And that means that every time you're up to bat, you're not going to hit a home run. And you're going to have to tell us that if you're facing a challenge, you know how to address it.
Hannah, I'm gonna have a question for you. Then I want to pull a question out of the chat, and then we'll shift to like navigating the current AI moment as a founder. Hannah, I'm just curious in terms of the founders you've worked with that, we've talked a lot about the impact narrative, but in terms of the metrics that they project and communicate, like what's the right needle to thread when talking about impact metrics with investors? When is it too much? When are they irrelevant? I think maybe one like really easy example that I often push founders on is they'll show their impact in terms of like gigatons of carbon when they're not selling carbon. And it's like, okay, but why do I care as an investor? So I'm just curious, like, what do you see people do really well on the metric side of the impact story?
Really good question. Gosh, I don't want to dodge it and say know your audience, because in some ways, like I've literally had my co-investor friends write back to me in an email and been like, I did the back of the envelope and I don't think this is going to pencil to a gigaton even at scale. Like some investors, impact first, are actually looking for that, right? So if you know, and most of them publish that on their website. So like be doing your research and you should know that, and it should be in the presentation. I think I see so many pitch decks that have the first slide, which is like, problem statement is like global emissions in agriculture account for like 40%, and it's like that is not a problem statement, unfortunately. That is impact, and it might be the impact narrative that you hold true to why you are doing this as part of your founding journey and as part of why the team is building this. But the problem statement needs, again, it comes back to like the like what is the problem for the customer, and how are you quantifying that? Is that time saving? It like time savings equating to cost savings? Is it revenue generation? Is it volatility reduction? Is it, I think there's a lot of resonance right now in the overlap between like bringing supply chains domestically and how that reduces not only volatility in supply chains, but creates independence from historic and legacy supply chains. Like I do think that there are elements of those metrics, but if you can't drive them down to a financial bottom line, I think um, they don't do as much work as you want them to do in the storytelling.
Mhm. Yeah, you're here. Awesome. There was a question. I don't know if we'll actually have a good answer from the group on this because maybe the answer is just like it's hard and you have to do it. But there was a question from Lindsay about the fact that, and I think this is like a pretty well-known statistic that women founders just get such a small fraction of venture funding. And the question is like, how, do you have any advice for how female founders can help increase their success rate in the market? Would love to hear people's thoughts. If you, just really quick answers so we can then move to the next section. Maybe Hannah, you want to take this first, or Marie? Either one or both of you?
I'm happy to. I'm sure Marie will be more eloquent. Um, I think that look, there are some elements of like do it anyway and don't take no for an answer here. I think that that is probably it sounds very trite and dismissive in some ways. I think that um I'll, some anecdotes. I've had a couple female founders in the fashion industry, particularly, talk to me about how much different their experiences have been talking to an investment committee who has at least one female GP on the investment committee versus an all male GP who's like, I don't understand why this is a market we should be paying attention to. And if it were all of their wives on the committee, it would be a totally different conversation. So this comment about like there is some elements of like the structural aspects of who makes these decisions is changing, and we hope that capital flows will, as a result, sometimes change with those structural flows. I think that's a very long time frame to kind of wait around for. And I think the other answer is just like uh, build a great business anyway. Like build a great business. If you have strong fundamental economics to the business itself, it doesn't matter who's building it, and eventually those economics will speak for themselves.
Anybody want to add anything? I have a quick comment, but if anyone wants to add before I jump in, go ahead, Marie.
I might add really briefly. I think Hannah's point is the right one. It's harder for you. Full stop. That goes for anybody who's Black, Latina, Indigenous, queer. Like the odds are definitely stacked against you, kind of full stop. And so whatever tools that you need to use, like you will have to use them more. It sucks and it is unfair. I think Hannah's point is a really good one. Like we can talk more about the narrative bubble we're in, where evidence, I think, is counting for less and less with VCs these days, which is an unfortunate direction that the industry is taking, and I think a result of some of the AIification. I will also say that like men in society broadly have been fairly emboldened by Trump too, and many examples of that. And Silicon Valley and venture capital, which is dominated by white men from certain institutions, are no exception. And so I think like the rails are off a little bit. It's like we don't have to care about DE and I anymore. I don't have to pretend that I'm not fairly biased. Like all of that is just adding layers. So like you're not crazy. The industry has changed, and I think things are really hard out there. So I think evidence, women in this industry, I think are pretty good at supporting other women. I don't know if there's as strong of a correlation between women founders and women venture capitalists as I would love to see and or directly be a part of, naming myself as part of this problem. However, like the number of friends, founder friends I have that I can't fund their company, the number of times, 6, 8, 10 times they will come back to me asking for intros, asking for a bump, asking for a warm connection. They will reach, and have no problem with that. Put on your mediocre white male hat, call yourself Chad. That's what I do. It's like a little alter ego and go nuts. Like, I think it's part of like, don't feel like you're asking too much or doing too much and play the same game. I think as a lot of men are playing, knowing that if I am hearing from a woman, I am absolutely making time and trying my hardest and going above and beyond. And I think there is actually a lot of folks out there that want to try, knowing that the odds right now are pretty effed. So maybe too pointy, but I just want to like, you're not crazy. It really sucks out there for you right now.
I think that the thing that I would add here is that, and Marie sort of mentioned this already, there are lots of reasons why a founder might be disadvantaged in a fundraise. They might come from an underprivileged group that is marginalized in the community. They might have a business model that's atypical. They might be operating in a market that feels squishy, like, oh, you're building a company in Africa. Cool, I'm not funding it, right? So there's all sorts of reasons. And I think in my experience, the people who are able to survive and excel in that environment are the ones who adapt to that reality and actually adjust their process and their sort of MO to that reality, right? So if you're a mediocre white guy building an AI, you probably need to have 50 conversations before you can raise your pre-seed round. If you're a woman building in hard tech for, the global south, call it 300 conversations. Plan accordingly, right? Extend the length of your fundraise because you'll probably need to. Accept lower pricing because you'll probably need to. Like there's all of these adjustments that you can then make. And I think the other one, and this is like sort of just this is maybe to Hannah's point, like might feel flippant or dismissive, but like a lot of this just boils down to not fucking stopping. You get a no, you don't care, you keep going until you get a fuck no. And you just keep doing it, right? And like you just keep pushing. And the people who give up, they don't raise, and the people who keep going and keep trying and keep fighting and like plan for that extended battle are then more successful. So that was kind of my thinking on it. All right, let's talk a little bit about AI in our last like half hour. And I want to make it clear, I think like we're going to spend more time talking about sort of how founders that are not building an AI can navigate the current moment. But we will come back a little bit to like using AI as part of your fundraise, which I would just be maybe more careful with than people are today. So, Marie, I know you guys mostly do like software and like call it maybe less capital intensive types of companies. But for the founders who aren't building an AI, who are successfully raising in the current market, what do they do well to break through the noise and like not be part of that narrative environment?
I fear that this is going to sound a little bit basic. I think one in kind of a similar way, if you are if you're going after kind of top tier generalist funds, like AI has sucked all of the air out of the room. If you are not an extremely charismatic kind of especially man founder from the right backgrounds and or building an AI, like not a lot of traction happening. That whole cohort of funds is playing consensus capital, and it's just a very different ballgame. So I think for on the one hand, just like stick to the funds that are open to non-AI solutions, which I know I'm stating the obvious for folks. And it honestly, Hannah's mentioned this already. It goes back to just the one-on-one. Find a problem that someone really, really needs solved and have them pay you for it. In critical industries like in our industries, I actually think a lot of customers don't want to or can't use AI solutions for their hardest problems from a product standpoint. Or the AI needs to be so specialized and built in such credible and secure ways by all these special teams. It's a really unique thing that they need to find. I will differentiate that between being able to be from a tech and software development standpoint, AI native and be able to build stuff really well, really quickly, in ways that supercharge your ability to solve the problems for the customers who are paying you. And I will say, like the rise of like consultant-led business models or forward deploy engineer models, like it's like amazing to me. On the one, like on the data center side, it's like we all hate gas, and now it's like no, gas is cool, gas is fine, data centers, we're good. And I think the same way, it's like only software, only software. It's like never mind, software is dead. Like forward deploy engineer services, these are no longer bad words. I think if you are genuinely and natively embedding like Claude and all these tools that let you go super fast and stay very lean and capital efficient to tackle what may or may not be like AI solutions for your customers. And so I think there's an AI angle there that with a lot of credibility and industry know-how you can put together, again, based on like, hey, this is a problem that someone needs to solve, and we are going to be paid for that. And so I think those are the angles that I think have seen worked. And if you're selling to utilities, they have a lot of feelings right now, and there's a very wide spectrum of who's using what AI tools and which CEOs hate it and which CEOs don't, and who's installed chief AI officers and where folks are at. Like there is information you can kind of gather around it, but all I would say is like stick to your expertise, maybe in-house a lot of strong AI tooling that's supercharged what you're able to offer customers. And yeah, just again, unique creative angle to a big problem that someone's going to pay you for. Like we are in a narrative bubble where like charisma and narrative take far more weight than they should. But I think there is a group of investors still that is looking for just like the evidence and the fundamentals of good business that should, be able to find you and fund you.
Daniel, anything you want to add to this like this dialogue? I think you have a lot of relevant perspective.
Relevant to sort of AI driven businesses, I think that there's obviously like the pace to $1 million in ARR is just completely increased, right? So you'll do that in 3 months before you go for a pre-seed, whatever it is. And so the questions have shifted from how fast can you get a little bit amount of revenue to what does it mean, and we use the word really early on in discussion, a durable business model. What does it mean to actually take whether it be a monopolistic position or a position that actually owns a set of customers over a long period of time? Because the big key is that anything AI driven relative, or at least the perception, uh, relative to the substitute good of the thing they were using before is just way better. And everybody can build it. So there's five competitors in every single category. So the question is, if everybody hits $1 million an hour, who's going to be the one that gets to 100 and why? And so a lot of the narratives that we're shifting are less about that initial traction and more about what that initial traction means for that later market dominance.
Mm.
So that's for AI specific businesses, if that's the question that we could talk
Yeah,
about.
and I mean, I guess I'm curious for the folks who aren't in AI, right? Like, how do you feel? What are they doing different to succeed when everybody's just like, well, are you an AI company? No, then I don't want to talk to you.
Yeah, yeah. And obviously it depends on the category, right? I mean, a lot of energy stuff it doesn't have to compete with AI. It's seen as the physical bottleneck for the AI economy. And so for those sorts of companies, I mean, geothermal, nuclear, a lot of storage stuff, there's a lot of momentum there, whether they call themselves a climate company or they call themselves a national security company or cybersecurity company now. It sort of in a sense doesn't matter if you're going for that same outcome and if you keep your
Yeah.
values as you sort of proceed there. And the questions for those companies have become in a super slushy offtake agreement throwing around world, are your contracts real? You relative to everybody else who ostensibly is going to serve the biggest market that ever existed ever in the history of the world. Are you actually going to be able to win those dollars? So I think my more macro perspective here is it's really, really important to understand what the sentiment of obviously the broad investor set and category by category sort of investor sets are at any given time. It's like May 28th, 2026, and that's very, very different than May 28th of 2025. And if you're able to understand that, then you can have the fundamentals of your business, which always have to be correct. You've got to really get those. But then you can understand what are the biases that you're actually facing when you enter the room with an investor today. So that would be my macro perspective. And then not to talk for too long, there is stuff that's outside of energy that's not seen as sort of downstream to AI, right? As
Yeah.
sort of physical infrastructure. Now, it is not an easy time for that,
Yeah.
like full stop. It's not an easy time for that because money is fungible and investments can go, they're chasing a return. So it can go to the high, what's perceived as the highest rate, highest value return. There's always the opportunity for counter narratives, and you will always find investors who are interested in contrary bets. Now, that may not be in the ecosystem of people that you know, and then the work is really to expand outside of that. Now, we're all sitting in, or a lot of us sitting in the US. Oftentimes, that means international segments. So,
Mm.
for instance, Japan still does a lot of carbon stuff consistently. The big corporations are doing a lot of investment in that space. They are consistent about it and they're not going away. And if you can go and they also do offshore wind stuff. So if you can go and engage with them and understand their ecosystem deeply, there is a lot of money over there for you, but it's just not in your inherent social circle. And so expanding to more of an international lens, and if anybody wants to talk about who's out there and what different country and what they care about, happy to do that. But expanding that will give you some more opportunity than just saying the only place I can go is kind of Palo Alto VC.
Yeah, that's really good advice. I want to kind of grasp onto something that you said and go to Kathleen because I feel like there is to some degree, at least in the impact first community, a lot of concern about the implications of AI, right? And so are you seeing actually pushback from impact investors, fellow impact investors, on how people position their impact work and then layer like, oh yeah, we deliver this benefit to this community, but we use AI to make it better. Like, are people reacting negatively to it? Do founders need to be mindful of that as they pitch impact first investors?
Good question. And I would say no. I don't think that what I'm hearing in the impact investing first space is a negativity about it. I think there is certainly for myself, I think there is a real question about whether or not AI needs to be invoked at all as part of the pitch. It's like there is this expectation now that people feel like unless I say that somehow we are using AI to improve our product or our service, that we somehow appear to be missing the boat. But oftentimes I think that organizations don't really quite know how they're going to be using AI. And so to invoke it makes it cause a little bit of mistrust. AI isn't predictive modeling, and so as you're beginning, if you're using it for predictive modeling, say that. Say, we're using these tools for predictive modeling. It's going to help us to do this, not necessarily use it for AI. I think it's really important for us to be able to, as impact investors, to be able to trust what you either are or aren't or doing with AI, and that maybe you're not using it blindly, and that you're saying, we know it exists. I know that I need to think about it. Maybe we're using it to increase our efficiency as an organization. Maybe we're using it to help us to add ideas to our team thought process, but we're not blindly trusting in AI. And maybe we're using it to fact check, but we're also not using it blindly as part of our business model. I think that sort of being honest about AI and not just invoking the term is what's going to help impact investors not develop a negative response to it when founders are talking with us about investments.
Let's talk about using AI in the fundraising process. Hannah, I'm curious, like in your work with other founders who are in the market right now, what are they doing with AI that helps with the fundraising process? And what are they doing where that's like probably isn't helpful? Maybe they're outsourcing thinking that should be done by them, or they're, I think somebody mentioned that like decks made by AI kind of all look the same, and there's like narrative inconsistencies. Like where are these tools actually doing a good job versus not?
Are they doing a good job in the fundraising process?
I mean, I don't know. You tell us.
Yeah, I don't think so at all. I don't think AI is replacing judgment or trust in any of the relationships that it takes to get fundraising done.
Hell yeah.
Period.
Okay. Yeah, I mean, I think one of the things that maybe I'll say is that a common place that we see people use AI is they're like, oh, make me a fundraising deck based on, this video I recorded or whatever. And there's a few things that happen there. One is that it looks like everything else. And all of a sudden, like you want to be an individual when you're fundraising. And if you present collateral that makes you look like everybody else, you're immediately discounted, right? Two is there's like these narrative inconsistencies. And then three is I think that what people will often do is they'll be like, oh, this large language model knows how to tell a story. And so I'll sort of delegate the like storytelling part of this process to this model that then creates a deck. And I think it's compelling because I don't actually know what a compelling story is. And that's like a really big mistake that we see a lot. Like you should figure out how to tell a compelling story first, and make sure that your materials reflect that. The other
I
place too,
might,
yeah,
oh, I just wanted
please.
to build on that, but please don't let me interrupt.
No, the other thing I'll say is like we see a lot of folks build financial models with AI. Please don't. They're just garbage. Unless it's like a single sheet model that is for, your like lemonade business, they're garbage. Full stop. Go ahead, Marie.
So I love Trust and Respect Hannah so much, but I wanted to maybe push back slightly because I do think there is a line to thread because I do think a lot of venture investors are expecting you as a startup to be very AI fluent in terms of maximizing your dev team speed, go to market, whatever. And AI is really good at throwing together prototypes. It's iterative, so it's good at coding. I don't need to tell everybody this, right? So I do think there is an expectation that like you and your startup teams are very good at using AI, and so it's like we want to see maybe evidence of being able to use these high tech tools to accelerate your business. I will say like it is a double-edged sword, especially when it comes to like the deck and fundraising, but maybe the softer version of that is like do the thinking, like do the 80% is the work of like cohesing and putting it together and like forming all of these things that we've been talking about. Like if you are then using Claude to help cut down some of the busy work or iterate on a slide or pick colors or whatever, like I do think that is probably the safest way to maybe dance on that line, which is like I am a coherent leader as a human being who can come up with my own ideas. And that idea dilution is what's so clear about a Claude generated deck. Like Claude is just not good at ideas. It's good at guessing the next word for story. So that's like the only thing I might want to add is be aware that I think there is some judgment on like how natively or up to speed or high tech are you as a startup founder because there is what feels like an increasing baseline understanding that you are some level of fluency.
Yeah, I would just jump in on that for a second. This idea that Claude is not good at ideas is really true, but it pretends to be. And so I see a lot of founders just say, "Oh, I have 18 different narratives that I've made with Claude. They all tell me that I'm perfectly right." Like your rubber has to meet the road, and you've got to engage with the market of capital in a very direct way to understand how they are thinking about businesses like yours. And at the same time, and that's from a pure fundraising perspective. At the same time, you have to engage with your business and the category you're in, and also a very direct way to find out whether that's true. This idea of like narrative optionality based on what prompt you put into Claude is a real trap that I'm seeing happen a lot right now. It's not what someone backs. They back a founder who understands the business really, really well. That's like, and then understands the biases that you have to answer from the venture perspective. That everything else is a little bit fluff. So sorry to jump in.
No, that was
I'm so glad
spot
you
on.
did. And I'm going to jump in on top of jumping in because if I can tie a little narrative bow around some of the things that I'm hearing in these threads, this is not a zero-sum game when it comes to using the fundraising process and the tools at your disposal to find the right investors who resonate with the right narrative that is authentic to your business and to the impact that it creates. Like Marie was saying this in a more eloquent way than I said, that if AI is not going to replace trust and judgment in the fundraising process, which is an iteration on Daniel's voice there of you have to be the market pulse. Claude is not pulse checking market sentiment of all the investors out there. Or maybe it might indicate to you that Japan is a viable market, but Claude is not the one going in front of the Japanese market, figuring out how to navigate those cultural differences and figuring out where the pockets would be incentivized to invest in a business like yours. And to Marie's point, like using the tools at your disposal, the baseline expectations from every investor in the market has changed. You, as the founder, have to be up against knowing that, like, now your competitors in different industries, but part of a diversified portfolio for that same venture investor is now realizing $1 million run rate in 3 months. Like, how will you communicate your diversification and your position within their portfolio? I think there's been some, headlines and, banker reports about like Halo and heavy asset, low obsolescence businesses that are now, when everything is an AI company, then nothing is important or defensible or underwritable from the perspective of a software investor. And so if everything is going to be cannibalized, then where else are they looking? Like maybe that's your in. I think, but that is always specific to your market context. And to Marie's point, if you're not like AI should be transcribing all of your notes and automating those in your CRM as you manage 1,000 investor conversations. That doesn't mean AI should be doing your thinking about your unit economics or what the long-term capital strategy is for the business. And maybe like it's not a zero-sum game is probably true of our commentary about like when you're a female founder raising for the first time or an emerging manager or raising in the global south where I live or any of these other aspects that make it feel like Chad's got his like Harvard relationships that's okay. What's unfair and favors Chad doesn't necessarily mean that you won't find those right partners for you, even if the process is a lot longer. Like it's not a zero sum game in all of that.
I maybe the thing I'll add here, and I don't know if maybe I'm not representative of the market enough, but I think that you should, as you go through, you can lay out the fundraising process like on a whiteboard, and you can be like, okay, which of these things are require trust and require quality? And those are things where you probably don't want to automate the process, right? So I'll give you an example. I think a lot of people right now are like, oh, I'm going to use AI for cold outreach, or I'm going to use it for investor outreach. I don't think that's going to go so well for you. Like that first interaction is your first moment to build trust and conviction from a person. And if you're spray and praying at that point, like it's probably not going to go well for you. And I think you kind of have to look at the entire life cycle of a fundraise and be like, okay, where does it make sense for me to automate? Note taking, great. Like updating your CRM, great. That's super easy. Um, Answering diligence questions for an investor, probably not a great place to do it, you know? And so that's how I would think about it. Okay. Last 5 minutes, I'm going to do a really quick round robin. Looking forward over the next 12 months, if you had to spend, like I'm going to ask everybody to do like 30 seconds. What is one like storytelling or narrative shift that all founders or most founders will need to make in the near future, given where the world is headed? Like, what's one thing that you think founders will need to do differently in the way that the world is evolving? Anybody want to take a first pass? Hot seat?
I'm happy to jump in.
Yeah.
I would say that, and I think this came up earlier, where somebody said we're using the same metrics. So my product is going to be equivalent to taking X number of cars off the road or planting X number of trees, et cetera. And I think that what we're going to be looking for is when you talk about your impact, where are those cost savings going to be used instead? If your product is going to be able, yes, plant trees planted, cars off the road, et cetera, are going to be important. But is the community that is going to benefit from your product or service, how are they going to be able to use those cost savings to improve the quality of life for the community they serve? Are they going to, if they use your product, are they going to be able to find those cost savings are going to be able to allow them to offer better, more product services, et cetera. So build on top of those traditional metrics that we're seeing, because they're getting a little stale and old, and find some metrics that are a little more additive to telling that outcome story.
Okay. Who wants to go second?
I'll jump.
Yeah.
I don't think there's anything, there's no perfect storytelling tool for the next 12 months. I don't think it works that way. I think it's really important that you understand what the macro narratives are. For instance, domestic priorities versus globalization, and what it means to align with sovereign interests, and how that's going to be a dominant trend over the next certain amount of years. If you understand those sorts of things, you can tie your story into those, and they're seen as being durable tailwinds. So I think that's really important. And then the only other piece would be is just more of like a personal piece, because I work directly with founders in a category where, especially for the early stage stuff, it's founder-led fundraising. There's no investment banker who can like raise it for you. Doesn't work like that. Um, the distance between having domain expertise and communication about that thing that you know is actually much larger. Like effective communication, it's actually much larger than people give it credit for. And it's really like being able to train yourself on the rhetorical devices from a verbal perspective, because frankly, rhetorical devices are very different than written as well. Being able to really work on that as a founder intentionally is a massive, massive upstream leverage point. Massive. And I find people really underestimate that. They often want to focus on, I just need to have one more meeting like just introduce me to somebody, you know? But like what you say matters and how you say it, like Dimitri said, you start with really, really matters. And it is not for technical found, it is not a foreign, it's not something you can't learn, you know? And it's really important to work on it. And that's not to say my last would be I work with a lot of hard technical founders, and they're always like, they want me to be salesy. It's like, no, you have to be authentic to who you are. And there are things that you started the business, the reasons you started the business that you have a lot of conviction around, and you build an authentic style, communication style around that. But it has to be worked and it can be worked on, and it's only become more and more valuable over the next 24 months. When you have unlimited narratives of unlimited potential, like things that seem like potentially good ideas, the people that are authentic and able to communicate their story, like one-on-one with another person, are going to really win. So,
Sometimes that comes through in vulnerability. Sometimes it is walking into the meeting, building a relationship, and saying, listen, my competitor, he could sell literally black to the kettle. And I am never going to be that person. And therefore, if you come along on this journey, we have to build this business differently. My competitor, going to be fast out of the gates. Here's why their technological approach doesn't work. And here's why we're going to be in it for the long haul. Like something like that, where you can I don't know, the authenticity you're talking about, Daniel, like not every narrative is going to fit everything. My plus one to this conversation of like what's the one thing that that founders need to walk away with is like don't just every narrative you tell is about building a relationship with longevity. Even when you are asked when you get a no from from an investor, you are going to tell them a narrative, and that narrative comes in the form of, hey, can I get feedback per the thread that's going on in the chat? Hey, can I add you to my investor list and we stay in touch? And then you send them monthly updates or quarterly updates that's going to continue a narrative and a relationship. AI will never replace you getting on a plane and going to like literally sit in someone's lobby until they meet with you. Like there is an element here of like narrative comes through actions and the way you maintain relationships over a long haul. And people forget that part of it. When you leave a job, when you fire a team member, when you when the way you respond to the no to that investor, that is part of the narrative of what you build into the relationship. And it's just as important as like what the first 5 pages of your deck say, if not more.
Marie, you want to close us out with our last minute?
I mean, that's pretty hard to come after, so thanks for that. I think maybe really fast and for digital software AI specifically, there are three things dominating slash crushing everything right now that will likely persist for the next 12 months, and that is this differentiation durability bar is like sky high. It's sky high. Similarly, LLMs, everyone's just assuming they're going to keep getting better and start eating specialized niche lunch. And so, like, two sides of the same coin there. That's an embedded assumption, I think, in the venture community of cloud's going to be able to do this pretty soon. So those two things, like attack, 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 and be very super maniacally clear, like right out of the gate. And then this third piece of like we are in an era of like high sparkle king making, and I think like to Daniel's point and to Hannah's point and all these points of like be authentic to who you are, build a really, really great business. And I think some of the narrative bubble that we're in around king making should soften as people realize there's not there's no alpha left if we're all doing the same things. So those I think are trends over the next 12 months to just have hyper aware and like get in front of versus being kind of more reactive or passive towards.
Amazing. I just want to say a huge thank you to the four of you for joining today and sharing your wisdom. We will be sharing notes and a recording for this session by, Anna, what do you think, by the end of next week? Maybe sooner. And if you aren't yet subscribed to the calendar, join so you can hear about events first. And we'll be doing another one in June. Thank you so much, everyone. Have a great rest of your day.
Thanks, Dimitri.
thanks,
Marie,
everybody.
Catherine, thank you.